Hey you guys, I'm Phil Town from Rule 1 Investing, and today I'm going to give you some tips on what do you do if there's a stock market crash. The stock market trends can create fluctuations. That's just the natural movement of the market. It goes up and then it comes down and then it goes up and then it comes down. Now, the market can go from an emotional state of sort of euphoria and excitement, it's going up, to, kind of like exactly the opposite of that, where it gets really fearful and depressed. We are floating along in a market like that right now. So the opposite emotion of euphoria, obviously, is fear. Everything is horrible, everybody's going to be unemployed, the sun's never going to come up tomorrow, and then we get a stock market crash. We are massively overdue for one of those. So here's an example from Warren Buffett's portfolio. Coca-Cola, which is one of his favorite companies, got to be ridiculously priced in the late 1990s, and pretty much everybody knew it. Warren had about 10% ownership of Coca-Cola at that time. And then shortly after, the stock crashed 50%. And he was asked in one of his meetings why he didn't sell it. And Buffett basically said, well, because I'm not nimble. Not because you shouldn't sell it, just because I'm not nimble. I can't dance in and out of big companies like that. So he would have crashed the stock all by himself if he had sold it. He didn't respond at all to the way people thought he would when he thought, the guy's going to say what he always says, which is you never sell. He didn't say we would never sell. He said we didn't get out even though we knew it was really way over, simply because we couldn't. So here's the thing. You and I can exit. We can get out if we need to. So what should you be doing and what should you be thinking about during a market drop? So here are 4 basic things you should be doing. Okay, number 1, you can't do the kind of investing I do unless you're okay with sitting in cash. You need to be able to sit in cash for years. You need to be able to be very, very patient. I've said this before. Charlie Munger, one of the best investors in the world, said that you don't make money when you buy and you don't make money when you sell. You make money while you wait. So sitting in cash means just waiting with your money in cash, in your money market account, on your brokerage site, or in some kind of short-term bonds if those are available right now. Who cares, because they don't pay anything. Something where you can get your hands on it is the key if you're ready to pull the trigger and invest. You have to be willing to do that for a long period of time while you're waiting for these fluctuations in the market to come along. Otherwise, you're going to be just like everybody else. The only way you have any shot at all of making 25, 26% per year, of retiring super wealthy, is to wait while everybody else is running around putting money into the market. Second, when that happens, make sure you've learned enough about a few companies before the market starts to come down so that when it comes down and they go on sale, you're ready to load up the truck. You're not ready to start your research, okay? This means that you've researched, you've found wonderful companies that are going to be going up a long time down in the future. When the market comes back, they're going to double or triple or quadruple. You can buy them when they go on sale. You can get a great deal on them when this market drops. So let's review this real quickly. First, you've got to be sure you understand these companies. And second, you've got to be in cash. So third, when the market goes to the other extreme, which is where it is lately, right? It's way up here. You got to be prepared to get out and get back into cash. Now you have to be patient if it continues to go up after you've gotten out, because you don't have a crystal ball. You don't know when it's going to drop. But all you know is at some point it is going to drop. Now, how do you know what to go to cash with? What I look at is what companies have already done very well that I bought at the last time this thing crashed. They're up really high now. I'm going to take my profits and go to cash as soon as this thing starts to get really stupidly high, which is frankly right where it is right now. Okay? Now, the ones that I'm not going to sell are companies I want to buy more of, even at the current prices or even down just a little bit from the current price. So you're just going to pick the companies you want to get rid of based on what is their value and what is their price. If the price is near the value, then you can sell those. If it's still on sale, hang on to it and buy more when it goes down. Fourth, when do you buy that stock? All right, it's going down like a brick, right? You've got a list of companies that are a small list of companies you want to buy on sale. Now the price comes down into the margin of safety, which means that company is now selling for half of what it's worth. All right, when do you pull the trigger and buy back in? Because there's going to be a very strong amount of fear that says, oh my gosh, this is just going to keep going down. Well, I'll tell you what I did in 2009. I was on CNBC and said this, that I was coming back into the market even though I didn't know where the bottom was. I told him, I said, look, it's at 6,700. It might go down to 2,500. I don't know on the Dow Jones Industrial Average. But this company's on sale, this company's on sale, this company's on sale, and I'm going to start loading up the truck. In other words, the one mistake you can make when the stock market crashes is to not buy enough stuff when they're still on sale. So here's what I do. As it's coming down, when I get my companies on sale, I start to buy them, and I buy about 25% of what I'm looking for. If it continues to go down, I load up another 25%. If it continues to go down, I load up another 25%. And finally, if it just continues to drop, I wait until it finally stops dropping and starts to come back up. And then I load up that last 25%. Now, the key thing though is be sure you just go outside when it's raining gold with a wash tub of money, not a thimble. The worst thing you can do, this will kill you emotionally, is to know your company's on sale, know you should buy it, and you don't. You just buy a little because the fear that's out there got contagious and you started to feel it too. So you want to be sure you understand these businesses. You want to have your short list. You want to get out at the top of the market as much as you can and load up on cash so you've got a big wash tub to buy into when those companies are on sale. So leave a comment below, you guys, with your answer to this question. Is being patient easy or hard for you? Really like to hear what you think. And if you've ever managed to be patient through a big market drop. Really appreciate you watching. Now go play. If you enjoyed this video and you think it was valuable for teaching you more about investing, you guys subscribe to the channel and share the video with your friends and share it with anybody else that might like this information.